We'll do a 24-hour stock stream. I don't think I'm going to do 24 hours. Well, I know I'm not going to do 24 hours. But I spent like an hour and a half with Victor, and now I'm doing another one. So that's why I put 24 hours. Yeah, let's throw out some stocks and try to get some ideas. I've been adding some accounting questions to I guess if you're a member, you'll get this in your feed. These questions. Here's an interesting one. It's kind of a dark question. Because I've been trying to study for the enrollment agent exam. That's an IRS exam where you can do taxes and get paid for it. But I just want to learn. I'm not really interested in doing it as a career. Just trying to learn more about taxes. But so if you have if a child dies right after they're born, which happens unfortunately, a question they may ask their accountant. I know they're probably not thinking about this at the moment, but when they do the taxes, is can I claim my child as a dependent? And depends. So the child has to be born. If it dies in the womb or it's stillborn, you cannot claim it as a dependent. Matthew, what's up? Pepsi? So the interesting thing is that when you're born, you don't have a social security number. You're not automatically assigned one when you're born. And the same thing if you're an illegal alien. If you move here from Brazil, you don't have a social because you're brand new to the country. So you have to get a social security number in order to file taxes or be claimed as a dependent. So a child that dies shortly after they're born, if it's whatever the reason, medical issues, which is most likely. Hey, Chris. And if they have a social security number, then it's fine. Then they could claim that child as a dependent. But if they do not have a social security number, then you have to do a paper filing, because if you do online filing, there's no area. You can't, under social security number, you have to put a number in. Like, it will not go to the next screen unless you put a 9-digit social security number. But if you do a paper form, you can just write the word died in the social security number. And you have to, obviously you need to provide proof. I'm not doing a 24-hour stream. I was just joking because I did a long stream with Victor. Now I'm doing another one. So I guess it feels like 24 hours, but I'm not that dedicated. So you just have to write in the Social Security section on the form, died, and you have to also provide proof that your child died. And the two ways to provide proof is the birth certificate, because on a birth certificate it will also mention the death, and a hospital record, or like something from the hospital, some form the hospital provides you. And like I said, if the child's stillborn, you cannot claim. And I know it sounds weird that why would a mother care if their child died a week after they were born? Why would they even ask for this? Well, it's still, they still have to live their life, and you do that. The nice thing about having kids is that the government subsidizes you. That's why those mothers with like 7, 8 kids who just sit at home all day, they're bringing in a lot of money because of all those tax credits. But if the child was born in 2024 but dies in 2025, then actually I don't even know exactly what happens there, because I'm kind of just still studying for the exam. But the way it usually works for tax purposes, whatever the situation was on December 31st is what you file as. So say for instance, you got engaged in January of this year, and you got married in December of this year. So you are married as of 12/31. So you have to file as either married filing jointly or married filing separately. You can't file as single, even if you were single for every day for 2025, except the final day of the year, 12/31, and that's when you got married. Even if you're single for 364 days, married for 1 day, you have to file. Whatever you are on 12/31 is what you have to file. But the only nuance is if the child is not there, it passes away by the end of the year. So you can't obviously take child status because, for instance, if you want to find out how many dependents you have, they'll say, do you have any kids? And you say yes. And the accountant says, well, how old are the kids? And you said, well, I have a 15-year-old and an 18-year-old. And the accountant will say, well, how old was the 18-year-old on December 31st of last year? And if you say 17, you could claim them as a dependent. But if they turn 18 mid-year, say in June they turn 18, then you cannot claim them as a dependent on your taxes. It's whatever status they were at the very last day of the year. So I put together this chart. These are common rates you pay. So if you receive a dividend, you have to pay either ordinary taxes on the dividend or long-term capital gains. So if you only had the stock for a month and then you got the dividend, you would have to pay ordinary taxes. But most people usually pay long-term capital gains, which is called qualified dividends. I put a note here. So to be qualified dividends, you must hold the stock for more than 60 days when you receive the dividend. And there are some stocks where you always pay ordinary taxes, like REITs, MLPs. So if you don't make a lot of money, like you're single and you make $30,000 a year, you don't pay any taxes on those dividends. Although if you're the head of household and you make $600,000 a year, then you pay 20% taxes on the dividends. Head of household, you have to have at least one dependent to be head of household, and there's other kind of stipulations. Zocold. But yeah, let's talk about some stocks. Get some ideas for Monday or the second half of the year. So here's this chart just stocks I kind of like, I follow. I should probably put more stocks because I do follow more than this. These are just popular stocks. So this is year to date. And it's Apple, Amazon, S&P 500, Uber, Tesla. Let me just change the formatting. I don't like this. So there's a formula down here. It says it's an if statement and also a nested max and min statement. It says, like, if this number is the lowest, then write the word worst. Or if this number is the highest, write the word best. So This formula looks in every cell in row 6. So all these cells, the formula looks into, and if it's the worst, it's going to say worst down here, and that's what it says for Apple. Apple is doing the worst of these tickers, and CVS is doing the best. CVS is max, so it has best in this cell. Tomorrow is the last day of the second quarter. It's the last day of the second quarter. It's the last day of the first half of the year. It's the last day of my life. Wait, what? What? What does that mean? Okay. So yeah, Apple down 21%. It's not surprising because I don't think Apple has been growing nearly as well as other companies. I don't think they have as much growth potential as these AI companies. Like Microsoft, I consider an AI company. Meta is an AI company. They not only do they have a lot of products AI related, they have invested a lot of money, like an ungodly amount of money into AI. Like just these companies on this list, these dozen companies or 15 companies, they've invested probably $1 trillion into AI, all combined. Like Meta alone invested like 150 billion. Yeah, what stocks you want to look at? Let's kind of, because it'll give me ideas. Do you expect a rebound in oil stocks? That's a good one. Oil. Earl. So when you look at a stock or anything, it's nice to see historically where it's been. The future, the past does not predict the future. Just because a stock traded 100 in the past does not mean it's going to trade 100 in the future. But it does give you information. And also, I think of stocks as like an athlete. They have muscle memory. Like if for instance, if you were able to run a 5-minute mile in high school, and say you're in your late 20s and you haven't ran since high school, you're much more likely to do a 5-minute mile again than someone who never did it. Psychologically, and also you have that muscle memory where you actually did it at one point. Same thing with stocks. If a stock traded at $1,000 at one point in the past and now it's at 500, it's much more likely to hit 1,000 than if it never ever hit 1,000 in the past. I'm excited about VG. Do you expect a Let's look at oil. Oil's a good one. So the thing with oil is before like the year 2010, we were very dependent on other countries for oil. Especially in the 80s and 90s, extremely dependent on the Middle East. And we were like at their mercy if there was a war, because if they cut off oil to us, that you can't run, you can't function as a society, because everything is on oil. It's still most of the things on oil, not as much as it was, because now we have more electric power and green stuff going on, but it's still a majority is on oil still. So when oil gets above like 80, it's great for oil companies and oil stocks. You make a lot of money, but it's not sustainable on a long-term basis, because we're not going to pay. Remember when we paid like $7, $8, $9 for a gallon of oil? On a short-term basis, we can handle it, but on a long-term basis, we cannot pay $10 for a gallon of oil. Today, maybe in 50 years, but today, if we pay for that much for oil, everything goes up. Because if you get food delivered to your house, right? How do you think it gets to your house? The driver has to put gas in the car, and if they pay more for gas, then they have to charge more for your food. So everything is going to go up. Everything's connected to oil, except Tesla, but everything else is connected to oil. So it's not sustainable above 80, and when it does get above 80, it eventually comes back down. And it's not sustainable below 50, because below 50, the companies producing oil cannot make money. They cannot be profitable. Because if it cost to produce a gallon, like, you might have companies. Let me just clean this up for a little bit so I. Okay. Cost per gallon. So a company may have different ways they extract oil. Maybe 3 different ways, and a cost per gallon could be like 35, 45, and 55. And how many gallons can they produce? So just say we'll just say 100 million barrels at each level. So they can produce 300 million barrels of oil per year. So if oil is trading for like $70, then it doesn't matter which type of oil the company produces, like which method. They're going to be profitable. Of course, they're going to go with the cheapest first. So they're going to produce the spot price. So if the spot price was 70, then they're making 100%. It's doubling the price. So 50% margin. So they're doubling the price. So they're doing fine. So they can easily produce all 100 gallons at $35 each. And then once they produce those 100 gallons, then they have to go to the second stage. They have to produce it at $45 each. They're still profitable at 56% profit. And if they produce all the oil at this level, then they have to produce $55 oil. And they're not as profitable, but at least they're profitable. So if they're able to sell 300 million barrels of oil, they'll produce all 300 million and just be a little less profitable as they go down the pipeline. That's if oil is $70. What if oil drops to 60? Jeez. They're still profitable on each stage, but it's really tight. Stage C. It's almost to the point where they're not even sure if they should produce it because they're barely making any money, but it is profitable, so they still produce it. Now, if oil the spot price of oil goes to 53, they're still profitable at this stage, 51% profit, only 18% by extracting oil at $45 a gallon, but they're losing money every gallon of oil they produce. So they wouldn't even sell these last 100 million barrels. That's what commodity companies do. They store the commodity. So they would store the oil somewhere. That's when the price of oil became negative, because there was so much storage of oil, and it was options. It wasn't actually negative. You didn't get paid to go to the gas station. I feel like, okay, so that's why oil really needs to trade between 50 and 70, because then the companies producing the oil can be profitable, and the people who are paying for the oil can still function in their day-to-day lives without everything going up in price. So it is at the right level now. About 70 or in the 60s is where oil really needs to be. Remember this? This is in April. That's when it became negative. So the thing is, with we're super reliant on what was it, Iraq or Iran? But on the Middle East on oil in the 80s and 90s. So we were like at mercy. And then once we learned how to do fracking, and we had there's another buzzword, fracking oil. How do in the US, because we're the largest producer of oil in the world, there's another word. How do we extract oil? Hydraulic fracturing. So that's pretty much what I said. Fracking or fracturing is used to access to oil and gas contained in tiny pores of rock formation composed of shale. Hydraulic fracturing breaks up the rock. I thought there was another. It's just a term. I can't remember the name of the term. So once we figured out how to do this, just to give you a little, the reason it's become so much more efficient producing oil is because in the past, like before the year 2000, we were only able to like drill vertical. So this, like, we would have a drill that goes into the ground, and it just keeps going further down into earth. So we'd have this machine. It would go we would drill all the way down, try to extract as much oil as possible. Then we would move over, go down, and move over. But once we learned how to do it horizontally, it was a game changer. And also, there's another innovation. What's the word? I can't remember. What are the innovations in oil production? Advanced, yeah. I guess the rigs got more, which optimize the use of the cutting down on fuel consumption. These innovations contribute to rotary steel. Well, it just technology kind of helped us produce oil in the United States, and now we're the largest producer in the world, which is great. Okay. America produces enough oil so it meets its needs. Yeah, I'm kind of just I think there's like a word I can't like think of it, and it's driving me nuts. Texas is by far the largest oil producing state in the U.S. Texas produces over. There's a ton of oil in Texas, right? And there's always been a ton of oil, but now with these advanced machinery, we can pull a lot more oil from the ground than before. Like when we were only able to go straight down, and we were unable, and like you have to like break the rock. The oil comes from thousands of years of rock that has been accumulated. So in order to get the oil, we have to drill down to the ground, break the rock up, and in the little pores of the rock, you extract the oil. But the machinery has gotten so advanced. Also, they use water, and water is forced into the well at such a high rate, it pushes the rock up. So like all these kind of innovations made it where it was still we still drill in the same places we did before, but we're able to get so much more oil. What type of I'm not gonna figure it. I can't. There's like a. Can you tell me what you think about community health systems, ticker CYH? It's the hospital that I work for, and I've invested a majority of my savings. The cost of oil in KSA, KSA. What is that? Is that Kazakhstan? Hey, Richard. Yeah, I'll do that ticker in a minute. CYH. I think of Venezuela. I think it's like 25 cents a gallon. Cost of oil, cost of gas per country. I wonder if it's still, I think it's still pretty low. I remember it was like 10, 15 cents when I first looked at it. Okay. Oh, this is by liter. I guess it cost of gas in Venezuela. It's 1 cent. It's even lower. It's 1 cent per liter. If you go to the gas station for a nickel, you can fill up your car. So it's crazy, right? This chart has every. So it's liter. So I think it's 4 liters. Liters in a gallon. 3.8. Let's just pretend it's 4. Okay. So in the US, it's a little under $2. So this is like $7 a gallon. That sounds high. It's not. Is it 7? I haven't even noticed. Yeah, I guess I pay like 6.50. So that's the United Kingdom. Okay, this is why. It's not even on. United States is not even here. Oh, here it is. $3.30 a gallon in the U.S. That makes more sense. I think it's like 5 in California, so it's probably 3.30 the average. Kuwait is $1 a gallon, but Venezuela, it's just the taxes on it. It's it's literally under a nickel for a gallon. So yeah, so if your car average gallons per car, what is it, like 15? how many gallons are in a car? Okay, yeah, 12 to 16. So yeah, 15 cents to fill up. Oh no, there's 4 liters. There's 4 liters in a gallon. So it's 4 cents times, so 60 cents to fill up your car in Venezuela. That's real. Um, Europe, it's always so much more expensive in Europe. Hong Kong is $14 a gallon, 14 US dollars. Singapore is $11 a gallon. It's expensive, right? I mean, I don't trade oil, but if you want my opinion, it's at the right price point. It's not over or undervalued. It's right where it should be. So I don't really see much change. That's actually predictable. CYH. If it was like 90 a gallon, then I would say, yeah, oil will come down. I'm not sure when, but it's going to come down. Okay. Um, um, I can't. There's a word. I just can't think of this word. I don't know. Um, I, okay. Oil production. I'm still stuck on the oil by country. You ever have when you have a thought and you can't think of it and it drives you crazy? Oil production by country. We used to be like, we weren't like the bottom of the list in terms of producing oil, but we were nowhere near the top of the list for thousands of years. It's always been the Middle East. Now we're number one. Um, the United States produces more oil. The United States produced more crude oil than any nation at any time, according to for the past 6 years in a row. The crude oil production together, U.S., Saudi Arabia account 40%. These 3 countries, global crude oil condensate. After peaking at 9.6 million barrels per day, annual crude oil production flattened, generally declined for decades. Maybe I'm just going crazy, and um, let me just try one more thing. Alternative. I can't. Alternative fuels. Okay, natural gas. Natural gas explained. Natural gas is formed from the same organic matter as crude oil. Coal. Comparing natural gas, instance. Okay, let's go back to. So the U.S. is 13 billion barrels per day. I think. So we're number one. Saudi Arabia, which was always number one, now is number two. Then Iran. Russia's always been up there. Canada produces a lot of oil. So we can produce enough oil to run our country. So you see, in the 1800s, we produced all the oil in the world. Even up to even in the late 1800s, we produced more than anybody else. I'm like over 90% of the oil in the late 1800s. Russia. So here's Russia. Russia took over in the late 1800s, early 1900s. But we started producing a lot more in the early 1900s. We've always been a big, rich country. This only goes up to 1934? Okay, I guess forget about it. Okay, so let's see. What is refining? Switzerland is almost $8 a gallon. I remember when oil was under $1. I got $3.39, 4.75. $475 million. So it's $500 million. No dividend. CYH. Yeah, I guess refining. I thought there's another word though. The refining process has gotten a lot more advanced as well. Okay, they are going to be cash flow positive, or at least the forecast is for them to be cash flow positive, peaking at 274 million in 2025. $274 million. Okay. Even with a conservative model, it looks pretty undervalued. I'm at $10 a share. I have their free cash flow growing about what they have 120 million in 2026. So let me use their exact numbers. 120 million, 274, and then 93. Okay, so I'm about $7. Hey Jen, About $7. They're trading at $3.39. A pretty high whack because I think it's a pretty risky investment. Let's see. Simply Wall Street. They're at 426. Okay, so natural gas. I think we produce the most. Okay, natural gas. Like that. Yeah, that's what we. I think I was thinking of natural gas. I don't know what it is. I thought there was some other word I would, which is like an alternative way to produce gas. Um, uh, natural gas versus. So natural gas is fracked gas. So it's the same as regular gas, except we use fracking. So we're using these advanced technologies which we didn't have access to before, and that's pretty much most of the gas we pull is natural gas due to fracking. And I think it's actually cleaner. Maybe not. The vast majority of natural gas in the U.S. is considered a fossil fuel because it's made from the sources. Okay, maybe I should relearn. I remember trying to learn about it doing a video, but maybe I should relearn because it was interesting, but I haven't. Why does the U.S. produce natural gas? Um, why does the U.S. use so much natural gas? Okay, me. I don't. Okay, positive earnings versus positive cash flows. Liquefied natural gas. Yeah, liquefied natural gas too. I guess all these alternatives to regular uh, the old school way. Now we have natural gas, liquefied natural gas liquids. It's all different, um, and this has helped us really enhance our production. Yeah, I think so. How how it is? I remember watching a few these really good YouTube videos with visuals. Uh, Oil extracted rendering. No, that's different. So oil and natural gas 101. So they put they break the rock and then they shoot water and they release all these little pebbles, which inside has a natural gas. But they have to pull a lot of earth, a lot of rock in order to get the oil out of it. It's a really interesting process. Uh, when what fracking? invented. So patent on the process. It was invented in 1940s, but I don't think it was used until recently. Only hydraulic fracturing became commercialized in 53, but it was really limited use until the 21st century. By 2016, fracking accounted for more than 50% of oil output, according to Energy. So it's probably even as late as 2012 it started to really take off. But anyways, let's go back to I think the reason for the Ukraine war is so that U.S. and Norway can benefit from selling natural gas. That's one idea. So community health, Simply Wall Street's at 426, so they say it's undervalued. I'm at 684. It's not easy to value. It's not too bad because they do project positive free cash flow, although they're projecting positive even though they never really had positive. It looks like if they did, it was real recent they had positive. Well, they did have in 2020, they did have positive in 2020, but then it went back down to negative. This is the past. So revenue does not look good. It's down, which is like the kiss of death. You can't succeed in business with declining revenue. It's the one thing that has to go up at least over time. I mean, in a 1-2 year time frame, revenue could be flat or even go down, but in the long term, you need revenue growth. So that's a big red flag that you may know why revenue's down. It was 20 billion in 2015. So it's down, 40% since 2015. And it's pretty much flat for 5 years. It hasn't grown at all for 5 years. Community health systems. High debt, a ton of debt. It's paid down a little bit, but still 11 billion. And then negative equity. And they have barely any cash. This looks really grim. They probably pay a dividend. Oh, no, they don't. I was thinking healthcare would pay a dividend, but in Yahoo Finance, the CEO makes over $1 million. He's been there only 4.5 years. I bet you it's a lot of insider selling. Okay, only one sell. 2/3 is owned by institutions, a lot by hedge funds and private equity firms. Is it good if hedge funds invest? It's kind of like a double-edged sword when you see a hedge fund investing in it. I kind of question, is something going to happen? Because if it's a good company, you would expect the big institutions or retail investors like us to own it. When hedge funds or private equity firms, sometimes there's kind of like this stuff they can do, like take it private. Because if you think of like an investment bank like JP Morgan, it doesn't matter if a company if a company's successful that they work with or not successful, they make money. Like when a company IPOs, they make money their underwriting fee for helping that company IPO. They buy the shares of stock and then they resell it to their customers. So so they just pretty much get a flat fee, like maybe 10-15 million dollars to help them IPO. So getting a fee is great because you're making money no matter what. It's like Uber, the corporation. They make money on each ride, even if the driver loses money. Even if the driver, gets into an accident, or even if the driver gets sick, they're gonna make money on every ride. There's no risk out there. But when you own a business and you have, employees get sick, they steal, things break, the business is going to lose out on anything like that. So the hedge funds, they just take the investment banks, they just take a fee, an underwriting fee, when a company goes public. So but hedge funds are not JP Morgan. Hedge funds are institutions. So I kind of wonder when I see, and I say it's double-edged sword, because it's a good thing when you have investors. The more investors, the better. Your stock is more likely to go up when you have more people interested in buying the stock. But on the flip side, I think of like a hedge fund who can maybe take the company private, or combine them with another company, and they're just doing that because they're gonna make their fee in the process. Okay, these are the biggest investors: BlackRock, Vanguard, the usual suspects. So it looks like they've been divesting or selling off business units because their employee count is cut in half, which I guess is more than half. And their revenue is down, I said 60%. So they're kind of shrinking, which is the opposite of what you want to do when you're a company. But sometimes shrinking helps because you become more efficient, more profitable. It doesn't look too good. But that's kind of what you do as a company. Say you have division A, B, C, right? You're a company and you have different business units. And then you have revenue in each division and profit in each division. So let's say these are billions. So let's just keep it easy. Say each division has 2 billion of revenue. And the profit in division A is 1 billion. The profit in division B is 1 billion. And that has negative 2 billion, which means they have 4 billion of expenses. So they're losing money in division C. So they have zero net income. So an idea is to just sell or shut down division C. That's like a spinoff or like I said, or shut it down. If it's not profitable, it doesn't seem like there's much value, they could just, and like if they have 100 employees in each division, so this is what it looked like in 2024, the business as a whole. And a new CEO came in and he wanted to make things more efficient. So the way someone makes it more efficient is layoffs. That's a common way to do it. So say by 2025, all he did was shut down Division C. And now their revenue went from 6 billion to 4 billion, but profit went up. It went from zero profit to 2 billion. And employee count went down from 300 to 200. So you would say he did a successful job. He turned the company around. If it was only this easy, but that's kind of what you do, you know. And then that happens a lot. Like you hire people, or you start to develop maybe a new product, and maybe it just doesn't go anywhere, like the Apple car, and just scrap it. But that's, you got to, like, this is how you grow. You can't just sit there and do the same thing day in and day out. You have to come up with new ideas and spend money. I mean, a lot of companies just acquire a company, like they'll just buy another company. But what they did was, it looks like they're doing it internally, and it didn't work. So they laid off a lot of people. I don't know exactly. They're trying to sell 2 hospitals to take care of debt. Yeah, so I mean, they reduced their workforce by 60%. So they obviously are making a lot of changes in that respect. And whatever a company does, whether they grow and expand and hire a lot of people, or they sell a business unit and lay off a whole department, whatever they do, you have to just accept the fact that they're doing it to improve shareholder value. They're making these decisions to become more profitable. You have to believe that. And if you do not believe that, you just don't invest in the company. It's as simple as that. If you think they're doing something shady or they're inept, but most of these people are pretty smart and pretty accomplished. And who are you to say what to do? Of course, everybody has their own opinion, but that's just how it is. You can't change it. You don't have the ability to own 50% of the company and make any decision at all. The only thing you can do is either invest or not. And if you're an employee like Tracer is, I mean, it doesn't really matter if the company is extremely successful or struggling, as long as you get your paycheck, right? I mean, you want the company to be in business, but a lot of companies have been in business for 20, 30, 40, 50 years and always seem to struggle. There's an entire industry. It's called the airline industry. They never make money. Historically, they just struggle. They bleed money, but they'll always be in business because we have to live. We cannot live without airplanes. Once airplanes came out, it changed. It made it so much easier to deliver stuff. And then it made it easier for people to visit family members. And it builds economies, because without airplanes, a lot of countries would not get all the money we spend in those countries, and they would just rely on their economy, which most countries can't get by on their own. So they have, um, especially certain countries like Italy, or they have tons of Americans coming and spending money, and that employs tons of people in Italy. Um, so so certain industries like airlines, they're always going to be around. If they're quasi government, even though the government doesn't really own them in a way, the government has funded airlines, and it always is going to make sure there are airlines around. If that makes any sense. But yeah, that's interesting, Tracer. That's what I would have thought, they sold hospitals. But if I was going to try to learn more about the company, I would just go to their 10K. Yeah, this is interesting. Like, to have somebody work in the company, so now I can kind of ask direct questions. This is when it gets kind of boring and I lose viewers because I get into like the financials. Hopefully, I'll be right back. I geek out about financials. Understand what you're saying. Most people say that I start talking a different language. That is true. I've gotten that before. So let me know if there's another ticker you want to look at. But yeah, this company is not in good shape. It's definitely not a buy, even though the model says it's a buy, because I'm just doing the future free cash flows, the projections. But I have a feeling they're going to be struggling, and as they're shrinking, people kind of lose faith in the company. They don't like go into these great lengths to go through the financials. But if they see revenue going down or flatlining, or they see employee count going down, investor sentiment, they get scared. But you could pick it up for a good discount, because it's going to probably keep coming down. Let me see. I definitely would not buy it now because I think there's a lot of downward pressure. Um, well, there it already came down, which makes sense. Because I was thinking like we were here, like at this point in 2016. So I was expecting a lot of downward, but it's already come down. I didn't realize we're past the point. This is a known thing in the market, and it peaked in 2015 at 60, and then it really never rebounded after that. There's been a ton of downward pressure, especially with the declining revenue. It did have a little resurgence in 2021, like every stock did. Um, it grew to almost 17, so you could have got a nice return. You could have like tripled or quadrupled your money in just 3 years. That's if you were crazy to buy it at $3, but it would have paid off. But you need to sell it because, of course, it came right back down. And there's always going to be these rebounds because when a stock gets low, wow, it got down to $2. That would have been a great time to pick it up. No, I'm just joking about the. It feels like 24 hours. But there's always ups and downs because when a stock gets low, then people realize and start talking about it like we're talking about it. Oh, this company, they have, 15 billion of revenue. They're not going out of business. They're the last quarter they had positive free cash flow. This quarter it's negative. So then there's buying, and then the stock gets pushed up, and then when it gets too high, then there's a sell-off. Then people realize this company on a long-term basis is not a good investment. So there's always going to be these ups and downs. But it does look like it's at a decent point because I don't know if it's going to get much lower than $2. That's kind of the resistance point in 2022. And the history of a stock is telling of the future because that's what happens. There's these resistance points on the top and bottom. And like, for example, 40 was a resistance point in 2007. So it didn't break through 40 even when it had the surge here. Well, it just got to 40, and then it did a sell-off, another surge, and it didn't break through 40. A sell-off in 2011, then a surge, and it just got past 40, which was the resistance. So getting close to 50. So that did give a new resistance level. And amazingly, well, this was 2021 where all stocks surged. Doesn't matter. And then it got to an all-time high. I don't think it'll get to that level for a long time. If it does get back up to 60s, it has to be because they're doing like a total revamp. They're acquiring a lot of companies. They're merging with the company. They have to do a lot. They can't do it with 40% declining revenue. But this was a huge sell-off. Like if you got it at $3 down here, and it was trading below $3 for several months, if you had brass balls, you held on to it, you could have made a 300% return. But you have to hold on to it through all these ups and downs. Same thing here. We're gonna see a push to double digits, and then it'll come back down. So it's a good buy for short term, but you have to sell it when it hits double digits, and that might not happen for 1, 2, or 3 years. You can see here it traded below $3 from 2018 to 2020, end of 2020, and finally broke through. So it's interesting stock. Their earnings in a few days. Lululemon, great company, Lululemon. 235, 28 billion. They don't pay a dividend. I thought they would have paid a dividend. Let's look at that free cash flow. Let's see their forecast. Lots of healthy free cash flow. So not much growth free cash flow. It looks like it's pretty much flat. Up to 1.6. So let's keep it at that level. Let's see the value. Exactly where they're trading at. 243, price is 235. So it's trading at the appropriate level. So that doesn't mean it can't go higher, but I would like to see historically what it's done. So it was trading at a really low level for a decade. And then the 2021 rush all the way up to 460. And then there was a sell-off, and it took a couple of years to get back. So it did reach its all-time high at the end of 2023. So we're in a sell-off period. Once it got to that looks like the resistance level is around 240. Once it got to 240, there was a lot of buying. Really volatile stock, and it's come right back down. So this looks like a good point because I don't think it's going to go much lower than it is now. It's trading at its 5-year low. It hasn't been 225. So look, its revenue in 2020 was 4 billion, right? And its revenue today is almost 11 billion. The same exact stock price, because 2020 stock price is 235. Today's stock price is 235. So there's a disconnect, right? So there's either two things. I'll show you what I mean. This is a really simple valuation method. It doesn't get more simple than this, I think. Let me know if this makes sense to you guys. I just got Contrarian Play Enghouse Systems Ltd. Parable. On Cloud Shoot Company. Thank you for your time. Yeah, sure, Tracer. And if you donate like $5 or $10, I will do the ticker, what you suggest. If you don't donate, I still might do it, but I just have to get to everybody. because this is logical. I think it's logical. Um, I guess I could have. So in 2020, revenue was 4 billion. Yeesh. And in 2025, we'll just do 11 billion just to round it. But the stock price, I guess I'll do December 2020. I don't know what. Okay, it was about 350. And today it's 225. How much it? I can't find a stock price. 235. How come it doesn't show it on Simply Wall Street? Oh, it's this chart. So the chart. This is the price chart. So it moves because I move my ticker, and then I can't figure out how much it's trading at. Okay, 235. Okay, so here's a simple valuation method. Okay, what stock is he looking at? Lululemon. I don't know why this. I can't look at the. Women be shopping no matter. Okay, so annoying. Okay, so the top is the revenue from 2015 to current. The bottom is the price of the stock. You see how they don't correlate at all? It's a smooth ride up revenue. And look at the stock price. Look how all over the place it is. So if you think about the company as a whole, right? If the revenue is 4 billion, so the whole company generates 4 billion of revenue in 2020. It goes up to 11 billion in 2025. So it goes up 175%. The stock price in 2020 was $350. In 2025 it's 235. So while the revenue went up 175%, the stock price went down 33%. If you just think of it logically, because when you invest, you're investing in a company. You're not investing in just some make believe thing. That's like saying, say you wanted to buy a small business, right? Say your friend owned a grocery store and you always wanted to own it. You thought it'd be fun to run the business. Um, and in 2020, you asked him, how much money would you sell me the business for? And he said, 100,000. And you asked him in 2020, well, how much was your revenue? And he said $300,000. 5 years later, you ask him, why is this? Oh, that's why. You ask him, well, now can you tell me how much you're willing to sell the company for? And he says, $67,000. And you're like excited. You're like, wow, you're giving me a 33% discount from 2020. And he said, and you said, well, what's your revenue? And he said, it's $525,000. No, actually, no. I went out exactly the same. It's 820. Think of it from the other point of view, because it's, of course, it's a good deal for you, but think of it from the other point of view where you own a business, right? And in 2020, you're going to sell it for $100,000. It's a $300,000 revenue generating business that you sell for $100,000. 2025, revenue goes up 175% to 825, but the person's offering you $67,000. That's what happened. That's the same exact thing. Like, it doesn't make sense, right? A company generating $4 billion of revenue is trading at 350. Fast forward 5 years, their revenue is 11 billion. Now they're trading at 235. So, can you tell me why? Like, maybe not like the exact reason this company's under value went down so much, but in general terms, why would this happen? I can think of two main reasons. There's pretty much two answers. The first answer is it was either undervalued in 2020. So it was a really good deal in 2020. No, wait, let me say. Overvalued in 2020. So it was extremely rich. It was a bad deal. Or it was undervalued now. It's a great deal. Like, everybody should be buying Lululemon based on this information, right? I mean, it's a combination of the two. It's not one or the other. It's almost always a combination. It was probably a bit overvalued in 2020. It probably shouldn't have been trading at 350 because, like, if you look at their PE or price of sales or price to book, let's see it. Oh, here's the PE. This is perfect. This is 5 years. Their PE went from 80 Where does Lulu manufacture? In Lululand. So this is exactly what I said. Let me just add the. This is good to add this. PE, price of sales. So PE in 2020, it went from 79 to 16. This is really helpful to get this. Price of sales went from 11 to 2.6. I think this drives the point home what I'm trying to say, because price multiples are, because it's the same company, but it's hard to compare even the same company because it's quite different. Their revenue went up 175%. So it's a lot bigger company in 2025. But you can see it went from trading at 79 times earnings to trading at 16 times earnings. And it went from trading at 11 times revenue to 2.6 times revenue. So you can see how overvalued it was. That's why I said it's overvalued. And how undervalued it is in the current time. What does Lululemon? More shares outstanding. What do you mean more shares outstanding? Half of Lulu's production runs through Asia, specifically Vietnam. Yeah, I'm sure. I'm sure it does. Asia, you have to. You can't really. So this just shows you in 2020, it was extremely frothy, and it probably would have been a good idea to avoid it and wait for it to come down. Because in order to become a good value, right, there's a couple of things have to happen. Either stock price goes down, or revenue goes up. That both happened. Stock price went down 33%, revenue went up 175%. And now it appears to be trading at an appropriate level. So now I'm going to change my viewpoint. Now that we looked at the price, that's a good thing about a price multiple, is that you can compare different, not only the same company different ways, you can compare different companies. You want to stick to the same industry, but you could also compare the same company at different time frames, because it's hard to compare Coca-Cola from the year 2000 to the year 2025. They are quite different. But the way you do it is price multiples. So I think this is a good exercise. I think this kind of makes sense. So even though I earlier said that it's probably at a good resistance point, and it's kind of like at its level. I don't think there's much downward pressure, but I don't think there's much upward pressure either. So I could see this trading sideways for a number of years and kind of trading in a pretty tight range. These bursts, it may burst through a new resistance level, but it's going to have to revert back to around 300 a share, unless of course revenue goes up. Then they can handle. I want to see this hospital. I wanted to see their assets. Like, if they listed out. Huh. I just want to see how many locations they have. It doesn't matter. Lululemon. Lululemon. Pretty toned body on her. All right, we were looking on manufacturing. Yeah. How many shares outstanding? I mean, we could look. Why does it matter? Like, what's like, what does shares outstanding do for you? You just want to see like dilution, things like that? I think there's a website. It lists like a chart for shares outstanding over time. So they've combated dilution by buying back stock. So the peak was 1.46 billion in 2013. But you can see they've been chopping down the shares outstanding, reducing it pretty dramatically. So that's good. This is what I would call a company that seems to be doing things the right way, a successful company. So instead of adding shares and diluting shareholders, they're generating cash and buying back stock. 1.46, 1.2. So here's the shares. You see how much they bought back. They bought back the most this quarter, 4% of their stock this quarter. Lemon is the Canadian American multinational, 711 stores. Only 27 years old. I thought they would be a lot older than that. Lululemon's research and development lab, White Space, is housed within its headquarters. They have scientists and physiologists. I guess one thing to look at is, do they have any like partnerships they're working on? Lululemon murder. But it looks like they mostly grow organically. Lululemon murder. That grabs people, like the dark headlines. That always grabs people. Lululemon murder occurred in March 2011 in Maryland. A store employee murdered her co-worker. The case received widespread media coverage and was commonly referred to as the Lululemon murder. So she got life in prison. So a manager in the store where Murray worked arrived in the morning to find the door unlocked, merchandise strewn across the floor, and mannequins in disarray. She could hear someone moaning near the back of the store. Frightened, she asked a man outside to help her search the store. He found Jana Murray lying dead in a back hallway, face down in a pool of blood. with a ligature around her neck. Brittany Norwood was found in the bathroom with zip ties binding her wrists. Oh, so I guess she made it like it was a robbery gone wrong. Bloody footprints were tracked through the store. The manager called 911. So that's crazy. The murder has been covered in a number of true crime podcasts. It's fashion, and fashion is fickle. So Norwood told police that after she and Murray had closed the store, she'd forgotten her wallet and called Murray to let her back in. Alarm records showed that the door was unlocked at 10:05. Two men wearing dark clothing and ski masks entered the store, attacked them, and sexually assaulted them. Wow, sexually assaulted them. While police initially treated Norwood as a victim, it soon became clear she was not. The victim had 331 wounds from at least 5 different weapons, including a knife and a hammer. Norwood's injuries were relatively minor and appear to be consistent with self-inflicted wounds. Wow. It was discovered that the tracks ended before either exit store. Additionally, someone at the Apple store next door heard the altercation. Police also found blood in Murray's car, which was identified at the trial as a mix of Norwood's blood and Murray's. Norwood was arrested for first-degree murder. What was the reason? She murdered her. I don't talk about that. Does anybody know? They don't. I mean, I would think she would say like, she cheated on my boyfriend or. Crazy. It must be a stressful job if you have to kill your. I guess she didn't give any reason to why she murdered. Okay. This is no. I was just kind of joking. UNH. Yeah, UNH, right? I think that's gonna blow up. UNH. It almost seems so obvious, right? UNH. You get a 3% dividend. Let's see the future. $31 billion. A lot of free cash flow. Yeah, I'm still close to $600, which is where it traded at before the crash. Because let's look at this chart. It peaked at 625. So that was in November 2024 was the peak at 625. It did come down like 625, 22% to 460. And then in just April, just 3 months ago, it was 600. That's really April, less than 3 months ago, like 2.5 months ago, 10 weeks ago, it was 600. When did the CEO get murdered? December. Okay. So the CEO got murdered in December. So there was that drop. It did. Yeah, it peaked. It reached its all-time highs in November. The CEO got murdered. Right here, the CEO got murdered in December, right? Or was it? Yeah, December. Where is it? So it finally broke through that resistance of 600 for the first time in December. CEO got murdered, and it's down 10%. No, like 16%. 16%. It managed to come back to almost where it was, a little less. I mean, it peaked at 625. It came to like 600. So pretty close to its peak. And then what was there was a bad news story. Was it that the income projection for 2026 was weak? What was so in April it's come down a ton. So it crashed in April. So what was the stock? I think it was just bad projections. Oh, weak projections. Motley Fool. Okay. It's time to buy United Health after 50% plunge. Look at this. Might want to change the ticker from UNH to UGH. Ugh. The latter better captures the feelings. Okay, a string of problems has caused United Health Group's shares to plunge 50% fourth quarter. Some analysts have downgraded the stock. Yeah, most of the company's problems should be temporary. That's what I'm saying. It's fundamentally, it didn't change the company. Hey, AB Ba, what's up? Looks like a good buy currently. I think tech is overhyped. Okay, they had a cyber attack in 2024, cost the company $2 billion. So higher Medicare Advantage costs are the main culprit behind United Health Group's suspension. So it looks like they added a new CEO after the death of the previous CEO, but then he left. Is that right? Um, what was the name of the CEO that got murdered? UNH. Brian Thompson. It's ridiculous, right? At the same time with Drew, it's got to be a stressful job to be CEO. Andrew Whitty, he left in 2025, so he only was CEO for a few months after the murder. Any worries investors might have had surrounding this move probably dissipated after quickly they learned that was returning. Okay, so Stephen Hemsley was returning. Hemsley was CEO from 2006 2017, a period when the company stock tripled. The two biggest threats to United Health. I also view the two biggest threats as iffy. What are those threats? An alleged U.S. Department of Justice criminal investigation of the company and President Trump's goal to eliminate pharmacy benefits. So there might be an internal investigation of the company. Note that I use the word alleged. President Trump did announce that he wants to cut out the middleman, a clear reference to PBMs. While I think all the issues are fully backed into United Health stock, PE of 13. Could the stock fall further? Of course it can, but I think the downside is much less likely than the upside. If I was to do a 50-50 guess every single day, I would say the stock is definitely going to go up. Overall, it should go up. It could come down a little bit more, but I don't think there's that much. It can't come down unless there's a bad news story, like the company gets sued or whatever. They was being investigated of billing fraud. Yeah, there is some investigations going on, legal investigations in the company. So I think, But it's like any company. There's always issues. They do have maybe a little more than most. But it seems like good value, right? It seems like it's a good time to buy it. I was talking about Kraft Heinz earlier. That's like at a decade low. This looks like an IPO in 2015. It's only been trading since 2015. It sounds odd, right? I thought it's been around for like 50 years. Does Buffett own Kraft Heinz? I think he sold it all. Like when is it going to rebound? So it's trading at an all-time low. This doesn't seem right. How could it just start trading? Maybe it was like a spinoff or something. It was Kraft in 2015. There was no Heinz. There was just Kraft. Ticker KFT, $32. And then I guess that same year, at the end of 2015, yeah, same year they merged with Heinz. It's a big merger, and it's kind of like when two people marry, there's conflict. It's never like everything's smooth. Um, you have to now share a bathroom. You have to share a bed. You have to like have only so much space to put your clothing. So you have to just there's some growing pains, like things you have to adapt and figure out. That happens with a merger too, when two companies come together, because there's only one CEO. You can't be two CEOs for Kraft Heinz. There's Kraft Heinz CEO, there's Kraft CEO and Heinz CEO. When the companies merge, I mean, one CEO is going to probably take over. The other CEO will probably get let go. Possibly they just work as president of a division. But usually, if you're CEO, you don't want to then take a job that's not CEO. Um, so, but that's just one position. There's a lot of overlap, a lot of positions that have to either get cut or blended together. So it doesn't look like they're doing that great. Here's the revenue. It hasn't grown since 2016. And when you think of inflation in 2021 and 2022, it was like 7-8%. So you would expect it to at least grow with inflation. So it hasn't grown at all. And this kind of company should be growing. If they were like a what's it called, like a medical device company, they might have small revenue or limited revenue until they start developing products, and it might be bumpy. But a company like this, it should just keep going up, because they should be developing new products. But even if they're not, they should be selling more. They should be doing both, but they should be selling more of all the products, like Heinz ketchup. Instead of selling 1 billion of Heinz ketchup, maybe it's 1.1 billion. You should, or like, you raise prices, things like that. They're just not keeping up. Casey's goodbye. I think it's currently down because of Trump's tariffs. Well, that's interesting. I didn't think of that. Because it's been down for 5 years, and tariffs are recent, but it could have come down further from tariffs. So it's trading at an all-time low at 26. So the tariffs were May. S down a it's not down too much in May and June. It's just 2, 3% maybe. Maybe since May 1st, it was 29 to 26, maybe 10%. But the real drop, okay, so the drop was starting in 2017 was a peak. It was right here. I mean, it was 2017 to 2020 was the real drop. It actually fell to its lowest level in 2020. Not now. It's 2020 was the low. So there's only upside. I mean, it's really how much more downside can it be? I mean, this is a pretty big company. This is not going bankrupt. You know, if they're going out of business, yeah, you would see it drop over time. But I mean, it just hasn't moved. I remember buying it too in 20, right after COVID in 2021. I bought a bunch of different stocks, and this was one of the stocks, and it just never went anywhere. I didn't get it at the very low. Uh, It's hard to get it something at the all-time low, but okay, I got it at 38. I wish I would have put the date. I don't know why I didn't put the date. I could just estimate the date, uh, probably around March 8th. I mean, it could have been here, but I know I bought stock in the beginning of April 2021. So it must have been because right after COVID, I kind of reshuffled my investments, and it just never did anything. I was getting a little tired with my money tied up because I mean, if you invest money and say it's flat or even up 1, 2% after like a couple of years, it's not the end of the world. But you don't want your money to sit there and do nothing because you could have put it into this stock and it could have been up 300%. Um, you could have put into a lot of stocks and it could have been up 50%, 80%, but instead you're at a stock that it's just flat. So I just kind of gave up. Why do you think Western Union is trading above an 11% yield right now, which is the highest it's ever been? Tariff started in March. Yeah, but it's not a tariff thing. I mean, maybe a little bit, but I mean, you can see the drop was here. And it hasn't rebounded since. It was why did it drop so much here? It's all pre-COVID because they merged in 2015. Maybe the merger didn't go through until 2017. But yeah, something must have happened. Western Union, 837, 2.8. 2.8. Um, Simply Wall Street's at 36. I'm at 38, so we're pretty close. $11 dividend. They have not cut their dividend. You can see the dividend is either flat or slightly increasing. And a yield between 2 and 4% is appropriate for most companies. And that's where they were for many years. And then it got to 5%. Now it's up to 10%. And it's not that they've been raising their dividend. That's not why the yield's going up, because the stock price is going down. If you ever see a yield like this, it's 99% of the time it's because stock price plummeted. So they will have to probably cut their dividend. Unless, of course, stock price goes up. So 2008 was so right before COVID in 2020 and 2008. So those two time frames, that's the peak. That's kind of like the resistance point for this stock, and it probably won't break this level ever again. I don't think it's going to ever get to that. But you could make a lot of money and receive a lot of dividends. It's really come down a lot. It had a resurgence in 2021, but then it's just really, really struggling. I could see it at 17, and then you see this big drop to 11, and you probably think this is such a great deal. And it seemed like a good deal for a year and a half. You were up most of the time, but at some point, there's just too much downward pressure, and then the stock comes down even more. So it's trading at an all-time low, 845. Yeah, at an all-time low. So how much lower can it go? Probably not much, but how are they affording the dividend? Are they profitable? Well, they do have positive free cash flow every single year, but the business model is not like something that you can see in the future. It's kind of like an old stale business, and with technology, payment processing companies like PayPal, like who uses Western Union outside the U.S. But in the U.S., I'm sure they have plenty of business in the U.S., but much less than they had, in the 80s and 90s. So it's a shrinking business, and if you want to chase the yield, it could be a that is true. The projected earnings, but this is pretty much what happens with these stocks, unless you really time it well. You put $10,000 into a stock like this, and then you earn Yeesh. 12%. So you earn 1,200 in dividends, but your stock is down to 7,000. So you actually lost $1,800 because it just keeps going down pretty much. At least historically it has. I'm not saying it always will, but historically that's been what happened. Wherever you bought it, if you bought it here, and even if you got a 10% dividend, you lost well more than 10% of value. I mean, you could keep holding it and then keep picking up dividend, but if it's 12% again, then you get $840 of dividends. And it's 12% again, you get 600 of dividends. So you'll probably burn through most of the 10,000 and pick up like 4,000 of dividends. So you're going to lose money overall, generally, unless you like I said, unless you time it really well, which is possible. Like if you happen to pick it up at 10 in 2023 and flipped it at 13, 14. But if you keep it more than a year, you're pretty much going to lose money. Because there's going to be a reverse stock splits once it gets down to $1. But you can't hold it more than 6 months. There's no way you can make money. Plus, they also have digital money transfers. Then I'm sure they have digital. I mean, it's but the demand is not there for their product. It's for Venmo. There's too much competition. There's no way. It's difficult because they have such a hold on physical money transfers. But physical money transfers are a dying industry, especially as all the older people pass, the people who used this service growing up, and so those customers are going to be kind of depleted, and then other countries who use their service, once their technology improves in those countries, then it goes away. But maybe something happens that's not. It's like, for instance, if PayPal acquires them, or something like that happens, something like significant, or they acquire a company like PayPal, and they convert a lot of their business to more techy. But it's pretty unlikely. It's been around 170 years. It's generally a hard way to make money in the market by trying to pick up like bottom feed. It's definitely doable, but it's and they will cut their dividend at some point. They have to, because I don't think they're going to have that much room to grow it, because they're going to get squeezed out of the market. So 2022 was over 900 million free cash flow, but since then, it's not even close. So free cash flow is down 40%, and they're going to keep getting squeezed because it just expenses keep going up, things like that. But if you invest in it, I don't think it's a terrible investment. I think investing in these microcap companies that never are profitable, I think those are usually bad investments. This is kind of like not a good investment instead of a bad investment. But I could see the appeal with the dividend. If it could just stay flat, your dividend, it works out. But if it was a good value, right? Why aren't more people buying the stock and taking in the dividend? Because it's not a good value. That's really and it's only 35% payout ratio. Yeah, so they do have a lot more room. Yeah, no, it's interesting stock to look at. United Health, I'd rather invest in United Health. What should I sell to buy United Health? Maybe I could sell my S&P 500. I hate this. I just get scared that I'm going to lose a lot. But that's the market. Okay, I better get going. Thanks for watching and interacting. I'll talk to you later.